Welcome back. In today's video, we're going to be exploring this whole recessionary talk. A Ray Dalio saying that a recession is likely, BlackRock's CEO saying that we potentially are already in a recession, as the crypto markets have been sideways trading and really not moving to the upside as much as many people anticipate. But now we are in this 12 to 18 month time period when I'm recording this video, and probably when you're watching it, after the Bitcoin halving. And the 12 to 18 month time frame is when we historically see the most volatility and the most massive moves to the upside in the crypto market prices. But we're not seeing that just yet. So what we're going to be doing is kind of talking about, can I still get rich in this cycle? Is the bull market over? Or are we still in a bull market? And I'm going to be showing you all different types of data and analysis from some experts in the field who potentially are talking about recession to what the Federal Reserve is doing. And that's from a global macro scale, kind of zoomed out looking at all of finance. And then what we're going to do is we're going to kind of zoom in and talk specifically about Bitcoin and crypto. And personally, why I feel we're going higher, but there are risks that a lot of people are ignoring right now for crypto. And I think that could exacerbate the violent or volatile move to the upside that we potentially are going to see in crypto. But before we go there, let's talk about the macroeconomic conditions of the US and the world. And by the way, don't forget to give this video a free thumbs up. Hit that subscribe button. We upload almost every single day of the year to bring you the latest happening in the financial world. And if you want to help support, click the join button to become a channel member or leave a super chat down below in the comments. Thanks to every single one of our channel members and super chatters out there. Now, great. Getting into the news, Ray Dalio says that a recession is likely, but it's not a normal one, saying, quote, "We are changing the monetary order effectively of the world." And I would agree with that. Ray Dalio said on Bloomberg, "I think it's likely that we're going to be in a recession." He said this the day after the whole tariff situation went, they basically delayed the tariffs by 90 days. And we know a recession is a prolonged period of negative economic growth for 2 consecutive quarters. We heard this a few years ago where the US's GDP saw 2 quarters of negative growth, and then you had all of these non-finance people saying, "Oh, no, that's not what a recession is." It's like, okay, then what is the definition of a recession, right? I mean, obviously, when you think about recession, there's a lot of factors that go into play. I mean, just the other night, I went to a restaurant in the middle of the week, and every restaurant in that neighborhood was completely packed if you didn't have reservations, literally from like 4 p.m. until 9 p.m., right? And it was in the middle of the week, not even in a really like businessy area. And I'm like, wait, but I thought that people are struggling, right, from a financial standpoint. But meanwhile, all of these restaurants are completely full. Now, that's not a full indicator of where the economy is. Obviously, there's a lot of other factors at play here. But this is just kind of when people hear recession, they're like, wait, it's the same thing with inflation. They used to say, well, inflation is transitory. We don't have to worry about it right now. And they were telling us that in 2021 when the inflation was actually taking place. We didn't get the data for that inflation taking place until a year later when you get the year-over-year numbers. And we were seeing in 2023, 8-9% inflation rates. But again, those are lagging indicators. So those indications are from the previous year. But it's not just Ray Dalio that's talking about like what's happening from a recessionary standpoint. But before we move on, I really wanted to kind of dive in a little bit deeper into some of his other comments, because Ray Dalio, he does see things really kind of zoomed out. So if you're not a macro investor or macro like analyzer of these markets, it's really good to kind of find a macro analyst who can do that. And I believe Ray Dalio is one of the greats. He said, "I'm more worried about the greater dynamic of these conflicts, the geopolitical conflicts. I'm more worried about more serious issues, the financial, the political, and the geopolitical." He said these factors feed on themselves, and tensions between China and US are escalating. Now, obviously, we know that could be bad because most of the stuff that the US gets is from China. And so, if there's a trade war, we're going to end up paying more, and this could cause more inflation. Anyway, Ray Dalio said that this is not a normal recession kind of situation. He said, we are changing the monetary order. He's referring to the sharp sell off in the bond market, a fallout from the Trump tariffs. Bonds have been a safe haven asset, but investors are dumping them along with stocks and putting their status into question. And yes, that is true. We are seeing a lot of issues with the bond market, which also gives me a little bit of kind of flashback to 2020 when we were seeing the same kind of situation happening and the Federal Reserve had to step in. But pause right there. We're going to get to the stepping in from the Federal Reserve in just a minute here. But before we go to what the Federal Reserve is doing, BlackRock's Larry Fink says the US is very close to a recession and may be in one right now. Again, the indicators, the actual data that's going to tell us, yeah, we are in a recession. We're not going to get that for probably multiple months, the same way that we didn't get the inflation year over year numbers until a year later. So the inflation numbers that we were getting were actually for the previous, rolling 12 months. And therefore, if you're not preparing for the inflation that is taking place or preparing for the downtrend in the market that would be taking place, like if you're waiting for somebody to say, oh yeah, 2 months ago we hit the top of the market, and you're waiting for that to like sell out of your position and take profits, that's probably too late. You have to do it in the momentum move to the upside. In a recession, you have to start saving when they're saying, oh no, we're not in a recession yet. It's like, what do you mean we're not in a recession yet? Like, is that because we haven't gotten the data yet to validate the recession? Well, when I hear the greats, the large hedge fund managers like Larry Fink saying that we're potentially already in a recession, that's a problem. That's a big problem. And meanwhile, we're also hearing in the crypto world, CryptoQuant CEO warns of a prolonged Bitcoin bear market. Now, let's be clear. On this channel, I have warned of a bear market because a bear market is coming. It's just a matter of when we're going to be in a bear market, how long the bear market is going to be, and also what downside are we going to actually see in the bear market. We don't know any of these questions until we actually get there. And there, again, it's therefore very important to prepare for it. Now, there's a lot of people who are saying that we're already in the bear market. Now, while I don't necessarily think that, I think we're in a corrective phase of the bull market, but there's still potential. We are in the bear market, right? So according to the CEO of CryptoQuant, Ki Young-ju, he said the stagnation reflects a longer-term bearish trend. On-chain data shows that capital inflows are rising. However, there's no corresponding increase in Bitcoin's price, suggesting the market is in a bear phase. Now, we've covered this with MicroStrategy purchases. MicroStrategy purchased more Bitcoin from a dollar perspective over the last, 3 to 6 months at the top of the market than they did in the entire bear market. And now the market has dropped 20, 30% from all-time highs, and they stopped buying. But when they were buying, the market wasn't really going up that much. And you're wondering, like, where is all the liquidity coming from? Where are all these Bitcoins coming from that somebody's selling at $100,000? When most people believe it's going much, much higher than 100,000. Anyway, the CryptoQuant CEO explained that a key factor of a bear market is the divergence between market cap and realized cap. Realized cap tracks actual money flowing into Bitcoin through wallet movements. Market cap, on the other hand, just reflects the most recent price on exchanges. He pointed out that historically, Bitcoin's price does not experience a true reversal within a short period. He predicts the current bear market could last at least 6 months, making it a rapid recovery unlikely. Now, what he's saying here about the Bitcoin price being down for 6 months, I mean, we're already multiple months into the drawdown. I mean, the top of the market you guys can see here on the chart, $110,000. This happened in or around January, the end of January, and we're now basically almost 90 days later, right? Very close to the 90 days when I'm recording this video. So we're already halfway there. So if we go another 90 days, that will be into May into June into July. So basically end of July before we see the potential reversal. And again, this is very in line with the market moves that we saw back in 2020. In 2020, we saw a drawdown at the beginning of the year into the pandemic shutdown. And then we saw a little bit of basically stagnation and a little bit of uptrend into quarter 2. But by quarter 3, this is when Congress started to, or I should say the Federal Reserve, the money started to hit the economy, right? They passed the laws in March and April for the pandemic assistance and all of that. And then the Federal Reserve started to print. And then by the time the money actually hit, it was basically quarter 3. And then in quarter 3, that's when MicroStrategy started buying. We saw the uptrend in the market, and it continued for the next full year. I don't know that we're going to go another full year, but this is where, potentially we have an extended bull market. I personally don't know that we're going to see any major extensions in the bull market or delays in the bull market. We're in the 12 to 18 month period right now when I'm recording this video. We're at the 1 year anniversary of the Bitcoin halving. So 12 to 18 months after the Bitcoin halving, which we are in that time frame when I'm recording this video at the beginning of it, this is basically when we see the most uptrends historically in the markets. So what I'm expecting here, and again, this is going to be based on some of the other things that we're going to be talking about in a minute here, but I expect maybe potentially sideways trading through July, August, or September. And then we're going to start to see the market moving higher. A lot of the things that are being implemented from a business perspective, a lot of the news that we've been hearing about executive orders, making crypto more a priority for the regulatory agencies, the SEC being more clear in what their expectations are. Like all of this that we're seeing, they just recently dropped some of the DeFi laws that were put into effect, or regulations that were put into effect in the previous administration. So there's been a lot of changes, but it's going to take a little bit of time for these changes to take place. And I think that in the next few months, this is where we're starting to see kind of rotations, not only in the kind of global markets, but also in people's portfolios. And I'm going to be doing a completely separate video because around these times in the markets where we're kind of seeing downward stagnation, these are the times to potentially reallocate your portfolio. If you think there's going to be better performers and you can drop some of the shitty performers, this may be a good time to do it. That video is probably going to be called Crypto Investing in 2025, or something like the nuclear price uptrend in crypto. One of those kind of titles you'll see coming out in the next couple of days. And in that video, we're going to really talk about the halving cycle, where we are, where we're going, what are the macro events that could push us higher, and then also what are some top signals to look for so that we know when we should be kind of fully offloaded. Because again, in my view, the next uptrend, whenever it happens, is the last one of this cycle. But how are we going to get there? Well, Arthur Hayes wrote, "What Jamie Dimon wants, Jamie Dimon gets. The SLR exemption is what we need to send Bitcoin orbital." Now, I don't want it to go orbital because orbital is just up and down and around and around and around. I want it to go into outer space, right? Into the next galaxy. But anyway, let's understand a little bit more about what Arthur Hayes is talking about here, because this has to do with the Federal Reserve. And by the way, today I am drinking coffee as normal. You guys know I love coffee, especially in the morning, and especially hot. Anyway, moving right along, as you guys know, this all comes down to what the Federal Reserve is doing, the central bank in the United States. Are they going to print money? Are they going to not print money? Are they going to ease up? Are they not going to ease up? Well, this is in response to Joseph Wang's post that says Jamie Dimon, the CEO of JP Morgan Chase, expects the Treasury markets to seize up, followed by Fed intervention. And then this is a summary by Bloomberg, and it says JP Morgan Chase's Jamie Dimon expects a kerfuffle in the U.S. Treasury market that will prompt a Federal Reserve intervention. He attributes the expected turmoil to all the rules and regulations and believes the Federal Reserve will step in only when they start to panic a little bit. Diamond advocates for bank rule changes, including exempting treasuries from the supplemental leverage ratio to avoid a repeat of bing, bing, bing 2020 treasury markets seizing, to allow the banks to become more active intermediaries in the markets. Now, we're not going to get too deep into the treasury market on this video, but effectively, the treasury market is the debt market. The debt market, our whole economy, the world's economy, is based on debt, period. End of story. Now, how deep you want to go into understanding this debt situation, it's absolutely crazy how many levels to debt there are. And effectively, none of it is ever going to be paid off, right? It's just about managing the debt, right? Because if you print too much money, effectively printing money is creating debt, right? If you print too much money without the actual other side of that, right? What is backing the dollar, right? It used to be the great, money velocity of the U.S. dollar, because everybody used it around the world. Everybody was transacting with it. Well, what we've seen is countries have moved away from transacting in the dollar. And so the dollar velocity is less, but they're still printing more. That doesn't make sense. Well, we know that there's always going to be some type of inflation. There's always going to be more money printing, but you have to back it with something, right? What is the US creating? Like if you look at the Chinese yuan, right? They are the manufacturing hub for the world. So that's what backs their currency. The products, the skill, the labor, the actual, all the things that they've built. Same thing for the US as well, but the US has less pull because we don't really manufacture that stuff. It's really, India, China, and some of those other countries. And this is why you see a lot of the conversation about bringing manufacturing back. Whether that's going to fix it or not, I don't know. But we're talking about debt. The debt is going to continue to rise. But what the banks want to do is they want to be more involved, right? They want as much control as possible. And so what is the SLR exemption? The SLR exemption is basically, we have to understand what SLR is. The SLR, or as Jamie Dimon calls it, the supplementary leverage ratio, disincentivizes banks from holding low risk, high quality assets because they count towards the bank's total exposure, which increases their amount of costly regulatory capital they're required to hold. Basically, like, if you bring them money, do they hold any of it? Right? I mean, so this is from a much larger scale. We know the banks don't hold any of it, and they don't want to hold any of it. They don't want to hold the treasuries. They don't want to hold anything. They just want money. They just want to make money, right? They don't care about your money. They just care about their money. Anyway, the policy consideration is a counter-cyclical design to temporarily exempt treasuries and central bank reserves from the SLR in either a systematic or discretionary fashion to allow a bank to support market liquidity during market stress. And we're starting to see market stress. A permanent exemption could also be considered as part of a holistic update of bank capital rules that balances the liquidity needs of the financial system while preserving resilience and stability of banks. The banks are the ones who created this whole situation with the debt and how the debt has to stay super balanced, otherwise everybody loses except for the banks. So they created the problem, and they're like, oh no, exempt us, like we'll fix it. This is the big problem with the whole banking and Federal Reserve system. This is why crypto effectively was created, to decentralize all of that power. And remember, the Federal Reserve is in the markets. I still talk to people who are in the financial world and don't believe it. I'm like, on the Federal Reserve's website, it literally says, the New York Federal Reserve's open market trading desk is authorized and directed by the FOMC, the Federal Reserve, to conduct repurchase agreements and reverse repo transactions. These open market operations, basically, they're in the same market that everybody else is in. support effective monetary policy implementation and smooth market functioning by helping maintain the federal funds rate within the target range. They're effectively telling you they want the federal funds rate, the interest rate, in a specific range. And if it starts to deviate, the Federal Reserve gets involved to keep the effectively suppressed or high. Depends. Now we talk about reverse repo and repo. Reverse repo is effectively sucking liquidity out of the markets. The repo is putting money into the markets. That's a simplified explanation of what these two do. Now, if we look at the reverse repo operations the Federal Reserve is doing, you can see during the downturn in the stock market and the crypto markets, during the bear market, we saw the reverse repos increasing. This is the Federal Reserve sucking liquidity out of the economy. $2 trillion a day. $2 trillion a day. They were doing this just a few years ago. They were sucking this liquidity out. $2 trillion a day. Meanwhile, when we see that there was basically no repo operations, repo is putting the money in. Well, just recently we started to see little spikes here and there of repo operations. Okay, so we're already starting to see little blips in the stability in the markets. And so that goes back to the question, is the bull market over? No, I actually think we're just at the beginning of this bull market, or at least the next leg of the bull market, because we've been in a bull market. I mean, in 2024, the markets went fairly high. I mean, across the board, almost every sector of stocks and crypto moved higher. Maybe they didn't go to all-time record highs, but these are the little blips that we are looking for. These are the little blips that tell us, wait, they're reversing, right? So we're in the market rotation right now. We're seeing the rotation occurring where the Federal Reserve is winding down quantitative tightening and beginning the next phase, which is quantitative easing. But that brings us to the Bitcoin conversation, how high Bitcoin is going to go, how high our portfolio is going to go, and what we need to start thinking about. Because again, we need to prepare for the bear market. That way we're not in the bear market and saying, okay, I didn't sell any of my crypto on the way up, and now I'm in the red. So understanding there, on one end, there's people saying, well, we're already in a recession, which is not good for crypto. It's not good for the markets. We're already seeing the Federal Reserve kind of marching into the markets, or slowly getting into the markets. But then on the other hand, we're hearing crazy price predictions. This is CZ and his price prediction of $1 million per Bitcoin. Let's listen to what he says.
You think we're going to hit $1 million Bitcoin this year?
Oh, this year, I'm not sure.
But you are confident that we will?
Over time, yes. I don't know if it's next month, this year, or next year, or however long, but eventually we will. I think we got enough momentum that this technology is just starting. I think people kind of have very high expectations for everything to happen instantaneously. So back in 1995, people wanted real-time video conferencing. Even today, video conferencing doesn't work that well all the time, right? We still have, hey, can you see me? Can you hear me? Kind of thing. So it takes multiple, like in 1995, people want e-commerce, but the payment infrastructure wasn't there. The logistics infrastructure, the delivery wasn't there. So it took many years for Amazon to develop that. So I think people underestimate the amount of time required to develop an industry, and they're less patient. But I think longer term, though, we've been around. Crypto has been around for like 15 years. But the first few years, nobody cared about it.
And this is a great point, guys. And this is why this is the first video that I'm showing you for today's video, is because CZ is saying, yes, we're going to hit $1 million, but it's going to take time. I've been having this channel since 2018. So effectively like 7 years. And what I've learned is that, a lot of these things take way, way longer than most people anticipate. Everybody wants $1 million Bitcoin. Do I think we're going to hit $1 million? Yeah. Are we going to hit it this cycle? Probably not. I mean, my high-end prediction for Bitcoin is basically about 200,000. That's on the high end, tippy top of the market. And so even if we go higher than that, right, it doesn't matter, because my buy price is significantly lower. right? And as we've covered before, again, most of this I'm going to be really covering in the other video where we're going to be kind of talking about the nuclear price uptrend. Because remember, the bottom of the market was $18,000 at the FTX collapse when I was telling my viewers on this channel, I'm not paying attention to any of these other companies that potentially are going to collapse. All I'm paying attention to is that Bitcoin has bottomed here, $18,000, right? So if we go to $180,000, that's a 10x. Now, granted, a lot of people are going to be expecting 100x's, 200x's, or 50x's in the market. You could get this in potentially lower market cap cryptos, or if you pick one that's like, that gets a very large scale partnership or implementation. But the days of like 50x's, I think it's going to be more and more difficult just because of how many cryptos there are in the market, how much money there is in the market, and most of the money, most of the funding is going into the top two cryptos. And when I'm talking about Ethereum, I'm not just talking about Ethereum, I'm talking about all the Ethereum layer twos that are built on top of it, or other cryptos that kind of tap into Ethereum to power or enhance their network. That's where all the money's flowing. The money is not really flowing to the altcoins as much as people want it, and I think that's because this cycle, it's all about the institutions. Now, I'm not going to play this video because this is 11, 12 minutes long, but essentially, we also know that Semler Scientific, this is a publicly traded company, basically following MicroStrategy's plan of action when it comes to acquiring Bitcoin. And their chairman said, we own a lot of Bitcoin and Bitcoin appreciates. What matters most is that we create shareholder value. We're early in accumulating Bitcoin and we're going to continue to do that. Now remember, they're continuing to buy the top of the market. MicroStrategy continues to buy the top of the market. There's huge risk here. Huge risk, because maybe MicroStrategy could deal with the downturn and could deal in a bear market just because of how large they are and how much big money is behind the company. But when you're talking about Semler, this company may not be able to deal with that. And although their shareholders right now like their plan of action with the Bitcoin acquisition strategy, if Bitcoin goes below their dollar cost average, which is likely at some point, and if it's a prolonged time that it's under their dollar cost average, this could force the company to end up offloading some of that Bitcoin and returning shareholder value. Because at the end of the day, these companies are looking at shareholder value only. That's their fiduciary responsibility. It's also concerning that MicroStrategy's Michael Saylor owns zero of his own stock. If he really does believe in his thesis and his strategy, I would imagine that he would still be holding some of his stock, and he's not. He sold all of his stock last year. Now, I haven't really got dug too deep into Semler Scientific, but there's another company called Janover, which has recently talked about a Solana strategy for, let's pull it up. It's google.com/finance. And basically they purchased, I think it was 40 something million dollars in Solana. Okay, not even Bitcoin. They're buying Solana. $4.6 million, not 46 million. No, they raised $42 million. It says it right here. They raised approximately 42 million that they're going to buy Solana with. Whether they bought the Solana yet or not, I don't know. But right now their market cap is $73 million. Okay. They were just purchased by basically some crypto industry veterans and I guess Solana maximalists as well. And then the market cap was around like $10 million, maybe less, when they purchased the company. So it wasn't like this company was like this grand old company. But the company has basically effectively 10x. I mean, you could see right here, the company was at about $4 or $5, and now we're at $50. So over a 10x in just a few weeks because of their Solana strategy. The issue here is that I believe personally that Solana still has more downside to go, and or in the bear market, we're going to see massive drawdowns here. And there is a lot of risk as these companies are buying because it's very bullish. And again, the lag effect of when they buy versus when people get excited about it, I think we'll probably see more companies adding to Bitcoin. I mean, we know GameStop is going to be buying Bitcoin. We know this for a fact. Well, now a GameStop investor is telling Fox that they should buy $2.5 billion worth of Bitcoin with their cash, saying GameStop is going to $100 and this is a $13 billion Bitcoin hedge fund, which is very interesting because, guys, what I've explained on this channel is GameStop is doing this Bitcoin strategy. I don't think because they love the strategy and think this is the best strategy to make money in the world. I believe GameStop is doing this because we're going to watch the video in just a second. This is their investor, but we've heard from the company that they're going to buy Bitcoin. I think it's their last shot to before they become irrelevant, because think about their retail business is no longer. People buy, games online. You could buy it on the console itself. And people are like, yeah, but you can't trade in it. They don't make any money on the trade-in stuff. Maybe they're giving you $1 for a game and then they're going to sell it for $10, but they have to find somebody to buy that game. Maybe nobody wants that used game anymore. And so it's just not a viable business. And so GameStop purchasing Bitcoin as their last ditch effort, that's not good. Like MicroStrategy, that wasn't their last ditch effort. They were making pretty decent amounts of money. Semler Scientific, I think the same kind of situation. Just doing this to protect the company. It could be very risky because if Bitcoin goes lower than their buy price, and GameStop investors are already like, I'm talking about the large scale investors, the ones that can vote and will vote. If the price goes below GameStop's dollar cost average, would GameStop be forced to sell? Like MicroStrategy, I think that they would be able to handle the downtrend in the market. GameStop, they would sell. They would sell. And just that fear of other companies selling also could exacerbate the downturn in the market. And then people start shorting it. And then Bitcoin could go much, much lower. And it could cause more liquidations and more companies to decide how they want to sell. Let's listen to what they're saying about GameStop here.
Charles, they come back on. Listen, as to their
Whoa.
Charles.
That started way too fast. Let's listen in.
Charles, they come back on. Listen, as to their almost $5 billion they have in cash. Again, no debt, by the way. We think they should put at least half of that amount, at least $2.5 billion, should go into Bitcoin at this point. The problem that Ryan Cohen, excellent CEO, has is that he should have made these moves a year or 2 years ago.
Bingo. Absolutely. This is a problem that you can't have these announcements in a bull market. No other YouTuber is talking about this. Every YouTuber, they're like, oh my God, they're buying more Bitcoin. Oh my God, GameStop is going to buy $2.5 million of Bitcoin. Or $2.5 billion. That's a good thing, obviously, right? But it's also very risky to do it in a bull market, because no matter what these companies say, I just covered in a video yesterday, or maybe the other day, MicroStrategy literally put out in their like reports to the SEC that if the price goes below the dollar cost average, that there's a potential they're going to sell some or all of their Bitcoin at a loss. So no matter what they're telling you, that they're not going to sell, it may not be their choice if the investors force it, especially if they're underwater, especially if they have to pay back the debt. And so that could be a huge risk to the rest of crypto. But guys, let's be clear, the bull market is not over. I don't think it is, at least. And we're starting to see the transition to digital money. It's happening more rapidly. It's happening more obviously. And as I've been explaining on this channel for years, literally years at this point, USDC is the new dollar. It's the new digital dollar. Everyone's worried about the Federal Reserve creating a digital dollar, a central bank digital currency. Guys, they don't have to. They're not going to. It doesn't matter to them. Because if USDC is a company that is basically running the dollar for the Federal Reserve, the Federal Reserve is just one step removed from that, right? The Federal Reserve is issuing the money. USDC is issuing the digital dollars. It's a big difference. They're not issuing money. They're taking money and giving you an equivalent of that money, the digital version. But they're not issuing the money. Maybe in the future they will. But I think it's going to continue to be the Federal Reserve, where the Federal Reserve just gives USDC, $1 billion and says, here, go disperse this for whatever. That's where we're going. And USDC, we're seeing the rebranding. We're seeing the integrations and the small little moves that Circle is doing to help move Americans into the new digital world. And this is going to take a lot of time. Like CZ said, this is going to take a long time. USDC, just a few years ago, people thought USDC was just another tether that, wasn't going to show the reserves. They weren't going to really be backed by the dollar. And Circle, which issues USDC, is already tapped in with the Federal Reserve. They're already involved. They are involved. If you go to Circle's actual breakdown of their portfolio and like their holdings that back the actual USDC, they write that they are involved in the repo markets and reverse repo markets. You can go do that yourself. I don't know exactly where it is here when we're live, but I think if you go to the Circle website and you go to transparency, you can see that there directly. I also did a video on it more recently. But yeah, the dollar is becoming the digital dollar. It is becoming the derivative for the dollar. This is what people are going to be using. Now, maybe not exclusively, because we see that banks are also dropping their own dollar or stable coin, right? PayPal did it. I believe Bank of America has their own. JP Morgan has their own. Now, whether they're using it or giving the public access to it or not, I don't know. But this is very bullish for the future. And in my view, regardless if we go parabolically higher, we're then going to go parabolically lower, right? It's like a roller coaster. But I do think over time, we're going to continue, regardless of how many recessions, regardless of the Federal Reserve interventions, crypto is going higher. Is it going to go as high and fast as we expect all the time? I think that's going to slow down as Wall Street gets their hands more involved and create more derivatives to keep the prices more stable. But again, you can't offset the inflation in the dollar by just manipulating the price of the crypto, because the crypto at the end of the day is still a limited supply, global, decentralized, and if people want it, they're going to want to buy it, period. And if enough people want to buy it, eventually you're going to have a supply shock, and that supply shock is what causes the price uptrend. So hopefully you guys enjoyed today's video and learned something. If you did, don't forget to give the video a thumbs up, hit that subscribe button. I'll see you when I see you, and crypto on.